Something extraordinary just happened in the financial markets. And if you're in the UK right now, what I'm about to show you explains why thousands of British investors are quietly moving money out of struggling banks and into physical silver. On December 24th, as I'm recording this, silver just hit $72 per ounce. That's a new all-time high. And here's what should concern every British saver. The Bank of England issued a financial stability warning just 3 weeks ago that reads like a preview of 2008 all over again. But almost nobody's talking about the connection between these two events. Before we get into why this matters for your wealth, I need you to do something. Check the current silver price right now on your phone. Write that number in the comments below. 6 months from now, when people are asking how they missed this, you'll have proof you were here at the beginning. And if you want more content that actually protects British wealth instead of the usual nonsense, hit that like button right now. Let me start with what the Bank of England actually said, because this is critical. In their December financial stability report, they issued what they call a stark warning. The central bank flagged elevated vulnerabilities in global markets, an overheated AI sector funded increasingly by and dangerous leverage by hedge funds betting on UK government bonds. Now, when the Bank of England, the most conservative, cautious institution in Britain, uses words like elevated vulnerabilities and dangerous leverage, what they really mean is things are looking grim. They're not in the business of causing panic, so when they warn you, it's serious. Hedge funds have £100 billion in leveraged gilt repo positions, the highest since data collection began in 2017. That's unprecedented. And here's the kicker. The bank is comparing current market conditions to 2008. They're warning about AI bubble valuations, fragile credit market, and potential contagion across the entire financial system. This isn't speculation. This is the central bank telling you a crash is coming. Now, here's where silver enters the picture. And this is what most people are missing. While the Bank of England issues these warnings, silver just went parabolic. Silver has soared roughly 149% year-to-date trading economics. That's not normal price movement. That's not just investors looking for returns. That's people positioning for something much bigger. And UK investors specifically are leading this charge in ways that most people don't realize. Let me show you the data, because this is remarkable. Between April and May of this year, UK silver buying absolutely exploded. The number of British investors buying silver more than doubled in a single month, jumping 108%. That was the highest reading in 49 months. These aren't random retail investors panic buying. These are people who understand what's coming and are positioning accordingly. And they're doing it while UK banks face unprecedented pressure. Let me connect the dots here, because this is the part mainstream media won't tell you. The Bank of England's warning isn't happening in isolation. Many risky asset valuations remain materially stretched, particularly for technology companies focused on artificial intelligence, with US equity valuations approaching levels not seen since the dot-com bubble exchange rates. UK valuations are at their highest since the global financial crisis exchange rates. What happens when those valuations correct? What happens when AI companies funded by massive debt start defaulting? What happens when hedge funds with £100 billion in leveraged positions start unwinding? The Bank of England knows exactly what happens. Fire sales, market dysfunction, credit freezes, contagion. It's 2008 all over again. Except this time the leverage is even higher and the warning signs are flashing even brighter. And here's what makes this terrifying for British savers specifically. Your money in UK banks is directly exposed to all of this. When the Bank of England warns about elevated risks and dangerous leverage, they're telling you the system is fragile. Remember what happened in 2008? Northern Rock failed. Bradford and Bingley failed. The government had to bail out the entire banking system. Well, the bank is now telling you we're facing similar conditions. And while they're issuing these warnings, what are smart British investors doing? They're buying silver at the fastest pace in 4 years. Why? Because silver isn't someone else's liability. When you own physical silver, you own an asset outright. It's not a promise from a bank that might fail. It's not a government bond that could be devalued. It's yours. Period. Now let me show you what's happening in the silver market itself, because this explains why prices just exploded to $72. Silver has been driven by a combination of factors including a structural supply deficit, strong industrial demand, and its recent designation as a U.S. critical mineral trading economics. We're now in year 5 of consecutive supply deficits. 5 straight years where the world has consumed more silver than we've produced. The global shortage is real, and it's getting worse. And unlike gold, which is primarily an investment metal, silver has massive industrial demand. Nearly 60% of silver's annual demand now comes from industrial uses. Solar panels, electric vehicles, AI data centers, smartphones, all of them require silver. And there's no substitute. You can't just swap in copper or aluminum. Silver's unique electrical and thermal conductivity properties make it irreplaceable. Here's where supply gets really interesting. And this is something most people don't understand. Roughly 75% of all silver mined globally doesn't come from silver mines. It comes as a byproduct of copper, zinc, and lead mining. So even though silver prices have exploded, mining companies can't just produce more. If copper prices drop because of recession, silver production drops too, even though silver demand stays strong. This is called inelastic supply, and it's creating the perfect storm. The market is screaming for more silver, prices are at record highs, but production is basically flat. And bringing a new mine online takes 7 to 10 years minimum, which means the shortage we're experiencing right now will be with us for potentially the next decade. And the physical shortage is hitting markets hard. Back in October, the London Metal Exchange, right here in Britain, nearly had a delivery default. They almost completely ran out of physical silver. When a major exchange in London nearly defaults on delivery, that's not a warning sign. That's a 5-alarm fire. The borrowing costs for silver, called lease rates, normally sit around 1 to 3%. Right now they've spiked to over 200% annualized in some markets. What does that mean in plain English? There's so little silver available that traders are paying insane interest rates just to borrow it for a few days. That's panic. Pure panic in the institutional markets. Now, for UK investors specifically, this creates both an opportunity and a challenge. The opportunity is obvious. Silver is in massive shortage, prices are exploding, and the fundamentals are incredibly strong. But the challenge is unique to Britain. In the UK, if you buy small silver bars or coins from most dealers, you pay 20% VAT on top of the silver price. 20%. That's a massive premium that immediately puts you underwater on your investment. But there's a way around this that most British investors don't know about. If you buy silver in wholesale 1,000-ounce bars stored in LBMA-approved vaults, you avoid VAT entirely. That's huge. For a British investor, that's the difference between profitable silver investing and getting hammered by taxes right out of the gate. There's also another option that's even better for some investors. Silver Britannia coins. These are the UK's flagship silver bullion coins, and here's what makes them special. They're legal tender in Britain, which means they're exempt from capital gains tax. Think about that. You can make unlimited gains on silver Britannias and pay 0 CGT when you sell. Try finding another investment in the UK with that tax advantage. Your shares? Subject to CGT. Your property? Subject to CGT. Your silver Britannia? Tax-free gains. That's why savvy UK investors are piling into them right now while prices are still accessible. But let me address something important, because I know some of you are thinking silver's up 149% this year. Maybe I've missed it. Maybe this is the top. And look, I understand that thinking. But let me give you some perspective that might change your mind. If you adjust silver for inflation at $72 today, it's still well below its 1980 peak. Back in 1980, silver hit $50 an ounce. Adjusted for inflation, that would be over $150 in today's money. So even after this massive rally, silver is still historically cheap on an inflation-adjusted basis. And unlike 1980, when the spike was driven purely by speculation and the Hunt brothers trying to corner the market, today's move is driven by fundamental supply and demand. We have a structural deficit that's not going away, industrial demand that keeps growing, and financial conditions that favor hard assets. Multiple major banks are now projecting significantly higher silver prices. Goldman Sachs, Bank of America, JP Morgan. These aren't fringe forecasters. These are major financial institutions revising their targets higher because the fundamentals are undeniable. Some analysts are even more bullish. Peter Croth predicts silver could exceed $300 per ounce by 2030 as global supply constraints and green energy demand explodes. Now, I'm not saying that's guaranteed, but what I am saying is the setup for significantly higher prices is there. The supply deficit is real. The industrial demand is real. The Bank of England's warnings about financial instability are real. And British investors are responding by buying silver at record rates. Here's what really concerns me about the current situation and why I think this is so important for UK investors specifically. Britain is completely dependent on imported silver. We don't mind significant amounts here. Every ounce of silver in the UK has to come from abroad. And right now, global inventories are at historic lows. COMEX registered silver stocks have collapsed 70% from their 2020 peaks. London vaults are running low. Asian markets are paying massive premiums over spot prices just to get physical metal. When supply is this tight globally, and the UK has no domestic production, British investors are particularly vulnerable to price spikes and supply shortages. That's why positioning now, while silver is still available at these levels, makes strategic sense. Let me also talk about what's driving industrial demand, because this is only going to accelerate. The UK government is all in on net zero by 2050. That means massive investment in solar panels, wind farms, electric vehicles, and smart grid technology. All of it requires silver. Every solar panel needs silver. Every electric vehicle needs 25 to 50 kilograms of silver. The green energy targets that Parliament has mandated cannot be achieved without enormous amounts of silver. And there's simply not enough supply to meet this demand. Battery electric vehicles use twice the silver of traditional cars. As the UK phases out petrol and diesel vehicles by 2030, silver demand from the automotive sector alone is going to explode. Then you've got AI data centers being built across the UK. Every server, every cooling system, every electrical component requires silver. The technological transformation we're living through runs on silver. And we're running out. So what should UK investors actually do with this information? Well, I'm not a financial advisor, so I can't tell you what to do with your money. But I can tell you what informed British investors are doing right now. They're buying physical silver, not paper silver ETFs that might not be fully backed, not silver mining stocks that come with company-specific risks, actual physical metal, either silver Britannia coins for the CGT exemption or wholesale silver stored VAT-free in approved vaults. Now, before you rush out and buy, understand a few things specific to being a UK investor. Number 1, avoid paying VAT. If you're buying coins or small bars from high street dealers and paying 20% VAT, you're immediately underwater. Use platforms that offer VAT-free wholesale silver storage or stick with CGT-exempt Britannias. Number 2, understand that silver is volatile. It can swing 5 to 10% in a single day. If that's going to keep you up at night, this might not be for you. Number 3, never invest money you can't afford to lose or money you need in the short term. Most experts recommend keeping no more than 10 to 15% of your portfolio in silver, with total precious metals exposure capped around 20%. Now let me make a prediction specifically for UK investors, and I want you to screenshot this. I believe British investors who buy silver now will see returns that absolutely crush ISAs, premium bonds, and UK equity funds over the next 12 to 18 months. The fundamentals are too strong. 5 straight years of supply deficits. No new production coming online. Bank of England warning of financial crisis. UK banks under stress. Government concerns about market stability. All roads point the same direction. Could silver correct in the short term? Absolutely. After a run like this, pullbacks are normal and healthy. I wouldn't be surprised to see silver test the $65 or even $60 level before continuing higher. But those dips are buying opportunities for UK investors who understand the big picture, not reasons to panic. The long-term trajectory is clear, and British investors who position themselves accordingly will be glad they did. Before we wrap up, I want to hear from you UK viewers specifically. Are you buying silver right now? Have you looked into VAT-free options or silver Britannias? Are you concerned about UK banks given the Bank of England's warnings? Drop your thoughts in the comments because I read every single one, and your British perspective is valuable to this community. And here's my challenge. If you found this video valuable, if you learned something about protecting your wealth as a UK investor, do me a favor. Hit that like button and share this video with 3 British friends or family members who care about their financial future. This information is too important to keep to yourself. And if you haven't subscribed yet, hit that subscribe button and turn on notifications. We're covering the biggest financial stories affecting British investors that mainstream UK media completely ignores. I'll see you in the next video where we're diving even deeper into what the Bank of England's warnings mean for your money in 2026. Until then, stay informed, stay ahead, and remember, wealth in Britain isn't built by following the crowd. It's built by seeing what's coming before everyone else does. This video is for educational and informational purposes only and should not be considered financial or investment advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions.